With 30-year mortgages approaching seeing 7%, do I just keep renting, or do I just take the dive?
Yeah, we've got a chart here. This is a good question that came up. Kind of incredible, actually. So this is the 30-year fixed mortgage rate chart going back a number of years here to 2013. And you can see we bottomed out there about 2.7%, on the average nationwide to almost 7% now. We
Hmm.
were around 3% at the beginning of the year. That's a huge run up. And what's interesting about that is that's a much bigger run up than we've seen in the Fed fund rate. If you look, the Fed fund rate went from essentially 0 to 3.25, and this has gone from 3 to 7. So it's actually outpacing the pace of Fed funds rate. And part of that reason is because they're having some liquidity problems in the mortgage market itself in terms of getting new money in to lend out. And that the Federal Reserve was actually buying these fixed mortgage, bonds during this time of quantitative easing, and now they're actually going to be selling these bonds. So we're likely to see this continue to go up. It'd be my opinion. And the expectations now is the Fed funds is going to do another 2%. So could we get to 9% mortgages by next spring or something? Because we're expected to get 2% more Fed funds rate just by the end of January.
Hmm.
And this thing has been outpacing Fed funds rate. Probably some limit to this at some point, but we'll see what happens. So the question is, should I rent because the rate's at 7, or should I buy?
Hmm.
Right. So here's how I look at this. You've got two things going on. Number one, the real estate market could get softer, and so that would say don't buy. The only problem with that is that right now the supply of new property is so low. And now we got new builders are pulling back their permits and such. They're not building. We've got people that are sitting on a 3% mortgage that might want to move, but they don't want to go to a 7% mortgage. We don't have defaults like we did in 2008 to create supply. And so the prices could hold up for a while here. But let's just say they dropped 10% and you were better off waiting because now you got your place for 10% less, right? The problem is during that period of time, most likely if those house prices dropped, partly it was because of this push on inflation the Fed's doing, and now you're looking at a 9% mortgage. I'm making this up, but just think about it. So if you went from 7% to 9%, that's 28% higher, and you save 10% on the house price.
Hmm.
Now, hopefully, you get a chance to refinance if the rates came back down, get 7% or 5 or 4 or whatever might come up if things come down. No guarantee that things come down anytime soon.
Hmm.
They stayed up for a really long time in the 70s and 80s, which is the situation that's most like this. So I guess if it was me, I would be, if I could afford a home versus rent, I'd buy a home now and take that 7% and hope for, and even if I did get a decrease in price, as long as I'm going to buy the home for long enough,
Hmm.
10 years or longer, I'll probably make that back, right? But it also has something to do with your rent. What's your landlord like? How often are you getting increases? Because rents are, right now, if you look at that CPI report, what they call shelter cost was one of the biggest drivers of
Hmm.
inflation that's happening right now. But that might not be true for you, right? You might have a 2-year lease that's locked in at an older price, and you're okay. You might have a really friendly landlord who just, is okay with you paying a lower because they don't want turnover, and so you might have a pretty good deal. So it depends, right? If you're in a situation where the rents are going up very dramatically and you're actually following the market in rents, then you might be better off buying if you could, right?
Yeah, and the nice thing about when you buy a house, you're going to have additional expenses, but you get to build equity with the rent,
Right.
or when you make your mortgage payments, you're paying down principal. And so, as long as the market has always, eventually come back in a lot of areas, I would say, especially in the Bay Area, we've seen prices keep appreciating. But it's not always the case too.
Yeah, no, it's a good point. I mean, if you continue to pay rent and wait for the house prices to come down, you do risk the mortgage rates going up and what have you. But if you do buy now and you're paying that payment, at least you're reducing your principal cost and you're actually building equity in that property. It's sort of like a forced savings plan. Obviously, long term, especially if you're younger, you want to be a buyer and not a renter. Most of the people that we deal with have had really good success with their home. And, you know, that forced savings, paying off that mortgage. I mean, even if you buy a place for $1 million, and even if it doesn't change in value, but you pay it off, wow, you just accumulated $1 million worth of equity in a place that you could use to maybe, you know, cash out in retirement or what have you. And so that would, you know, obviously homeownership's the way to go, but the question has to do more with a short-term issue. I would be on the side of, hey, if I'm not in a great rental situation and I could afford to buy a house at these levels, I'd go ahead and buy that house. But you know, because I tell you, even waiting a few months, this rate, look at this, it's not going down. I mean, look at that line, it's going up, and you know, maybe it'll peak out here and start to come down, but I doubt it. Not with that CPI report that just came out. So factor in all those things and take a look, and you know, at least, and you were talking about this, and I was talking about this. The houses that we're seeing, you know, in our neighborhoods, and I live in Willow Glen, and you live in Sunnyvale.
Yep.
Yeah, we're seeing kind of a 5-7% drop from the price to get sold, which is, you know, kind of a big deal, it's a lot of dollars, but you know, probably more than that overpriced anyway. I mean, let's face it, this place is crazy. So still, things are selling. It just got to come down a little bit in price to get that sale, which makes sense. So at least you're not out there buying like you used to have to buy with 50 other people making a bid sight unseen. And, you know, there's some crazy stories that we saw here, and that seems to have died down. I'm actually seeing open houses, you know, which kind of cracks me up because they didn't have open houses. You know, the sign went up, sold was on top of the sign at the same time. And, you know, it was sold before it really even got to be, you know, advertised. And, you know, now they're having to, you know, work for it. But so interesting times. Yeah, exactly.